hello everybody. So another awful day in the market, an awful day to finish an awful month with false hopes down, false hopes down, false hopes down, a month for nothing. And go figure right now, some of the biggest losers are Nvidia and Tesla. Even though Tesla is at an enormous inflection point, even if you believe it's an auto company, they're going to have an awesome quarter because the credits are running out. People are rushing to buy. The stock is down 3.5%. Nvidia is down also nearly 3.5%. And it had an outstanding quarter. I listened to the entire call, like most people. The market just wants to go down, and there's nothing you can do about a market that wants to go down. The manipulation in August is second to none. Next year in August, I'll definitely take a vacation and just not focus on the market. Even if we had the best news at Jackson Hole, and that did nothing to help the market. We had the best news. He couldn't have been so clear. He dropped the 2% inflation target from the minutes. Like he dropped that. Like he's not. Anyways, today we had good inflation number. They were in line with expectations. So like exactly in line, exactly what the market was expecting. And you know what? If the numbers this morning had been down, like low. If the inflation numbers had been better than expectation, i.e. if the inflation numbers had been going down, that would have been a bigger beat. Even if you would have had that beat, my guess is that the market would have dumped too. This market is becoming crazy. This market is deciding to dump. And so the 5 years worth of irrationality that we've had since 2020, those 5 years continue. The 2020s are not going to be a good decade. I officially called it a few months ago. If the 2020s are just not going to be a good decade. They're going to be nothing like the 2010s. And I was very, very lucky to enjoy the 2010s. And if you are starting investing, just know that in your 4 to 5 decade of investing, you're going to have decades that are going to be no good. 2020, frankly, right now is looking like it's going to be no good. But anyways, we'll see. We'll see what's going on. A lot of people are saying, oh, those rate cuts are going to trigger some fears in the market. I'm bullish. I believe so many stocks right now are so undervalued. And of course, the assets that I find extremely undervalued right now are the treasury companies. The treasury companies which are bringing Bitcoin mostly and the internet computer, which other people call crypto, but the new internet protocol on which replacements for banks, replacement for insurance companies, replacement for any Web 2 company is going to be built on, those are also coming on to TradFi. And I think that's going to be a very, very big deal. And so we may see an era where the markets are driven by assets held on balance sheet. And this is something that we've seen before. If you look at the old waves of the market, there's been many treasury-like companies or treasury-type companies. Of course, today, many people call them crypto treasury companies, digital asset, right? As Tom Lee says, he prefers the word digital asset treasury companies. The gold miners, they had a big rush in the 2000s and people were excited and looking at the reserves and valuing them based on their reserves. If you look back again in the 2000s, the top of the S&P 500, the top companies were oil companies. And actually, if Saudi Aramco was actually a traded company, you would probably see it at the top as well. Maybe not as big as Nvidia, but close to Nvidia. So some companies are valued based on their reserve, be them and commodity reserves. What I mean, be them gold reserves, be them oil reserves, right? Oil and gas reserves. And if you go way back, like in the late 80s, the 90s, you had REITs and companies were valued based on their real estate and how much real estate they have. So the main point I'm trying to say is that we may see an era where companies start to be valued based on their hard commodities, on hard stuff that they own. And this is especially important. Like if you look at For example, Elon Musk's grand theory of business is that you need to do manufacturing, you need to do hardware. Hardware is hard, and that's kind of a philosophy. And if you follow like the whole Musk saga with the launch of OpenAI's macro hard doors, and he's using AI to create a software called macro hard doors to replace Microsoft Windows, right? And that's all rooted in the fact that, of course, Microsoft is mostly intellectual property, but it's not tangible property like gold would be, like gas would be, like a building would be, or like a Bitcoin would be. And of course, in Bitcoin, we know Bitcoin to be tangible because of the absolutely insane thermodynamically sound miner network. So anyways, in an era where we know that the Fed has no choice but to debase, and debasement will be crazy, and that has been my working hypothesis, and it has been crazy. Of course it has been crazy since 2020. It's going to get worse in my view. Then I think we set up in a world where hard assets outperform, and frankly, I don't have a problem imagining gold also outperforming. Oil, maybe. Why not? It's a hard asset. It's tough to get it out of the ground. It requires quite a bit of work, right? Real estate is a different story. It depends on the type of real estate. But if you're looking at forests, if you're looking at land, if you're looking at agricultural real estate, you're probably fine. If you're looking at commercial or retail, like strip malls, you're probably more in trouble. So perhaps a little more risk on this one. Maybe oil has a little more risk too, but gold and hard commodities, companies built on commodities, companies built on gold, and companies built on the hardest asset, which is Bitcoin, to me, they are going to outperform in a world where the Fed is going to debase like crazy. And of course, crypto treasury companies, hard commodities of our era, like Bitcoin, like Ethereum, like Solana, these hard commodities, and by the way, for the maxis in the audience, I'm not putting them in the same bucket, just to be clear. But these hard commodities are also networks. They are also networks. And so you are gaining the value of a commodity that typically does nothing for you. But the difference is that these commodities actually do a lot of things for you. And that is their networks. And so they grow more exponentially. Just like the telephone, more people get the telephone became a very valuable thing. Train stations, same story. The more you have trains and train stations, more valuable. There's a dual story to Bitcoin. That dual story is that of benefiting from technological advancement and networks and people joining the network, and also benefiting from the rarity of it. This is the future that I see too. Over the medium term, I think your stocks, your assets, they're going to be tokenized, and they're going to need to be trading against USDC and USDT. That's kind of a future that I see. This is already a lot of the data streams that we have in the crypto world are based on pairs between whatever asset and USDT, USDC. I think we're moving to a world where stocks are going to be also divided by USDT and USDC. And over the long run, and this is my long-term thesis, your stocks and your assets over the very long run, they might be trading against Bitcoin. And simply you will see, and it will be Satoshis at this point, but you will see a company like NVIDIA being traded in Satoshis. And, there is this alternate world where you could have people who trade NVIDIA stock in Satoshis, and you have people who trade NVIDIA stock in, I don't know, Solana or SUIG. That could also be a future. I would argue. We don't know yet. It's tough to know. You gotta spread the bets, and it's tough to predict the future. It's one of the hardest things, right? So back to now, back to today, and of course, as you know, on this channel, my big bet on this channel is Bitcoin, right? It's Bitcoin to me doesn't have the shadows of the other assets. So, anyways, let's talk about strategy, and this is gonna make people mad, but again, I can't argue with the facts. Today, yet again, second video in a row I make about this. Today, strategy, as I make the screenshot, don't you go tell me in 5 hours what happens, because I can't predict the future. But today, right now, as I make this screenshot, strategy is only down 0.35%, while Bitcoin is down 3%. right? So in the days of theory, in the olden days, you would have actually strategy be down, 4.5 to 4.8%. So strategy, when it's only down this little and Bitcoin's down this much at the same hour, at the same time, what does that tell you? That tells you that strategy is rebounding. The MNAV is expanding. The MNAV is rebounding. And I want to call your attention to strategy.com, to the dashboard. If you look at the dashboard, I don't know if you ever noticed this little green text right here. The dashboard makes very, very clear the direction of the MNAV. You can see the Bitcoin holdings are down. The Bitcoin price is down, right, and the same amount, of course, because they didn't. I mean, they haven't added within like the past hour, so in the same amount. But if you look at MNAV is going up by 3%. So you have a delta of roughly 7. You have a 7% delta between both. So MNAV is rebounding, and I know it will make a lot of people very sad because they can't complain anymore. But MNAV is rebounding, and this is a pattern that I'm seeing across many treasury companies, and this is what tells me the sell-off has been overdone. If you look at Mara, of course, the second larger holder of Bitcoin. That's why Mara makes sense. Mara is now trading at a 1.08 MNAV, right? And Mara dropped to a 0.98, 0.97, like at the worst. And now we are back in the positive. If you look at CleanSpark, of course, MNAV is much higher, something like a 1.9, I think. But CleanSpark is also not nearly down as much as Bitcoin. So the proxies, in my view, they are rebounding. And a big question when you look at that, and when you look at Mara's amazing ability to defend the 1x MNAV, and they haven't done anything. It's just the market not really selling it off more than 1x. Really makes you wonder, are we going to see something like GBT type discounts ever again if a 2022 bear market happened? Some people think we will, some people think we won't. The question is, are we going to get another 2022 style market? And I probably don't think so, is my answer to that, because as many people point out, when the gold ETFs became a thing, you had a wonderful rally in the price of gold. And for Bitcoin, we have something even more explosive, which is not only the ETFs are a big deal, but we also have Bitcoin treasury companies that are a big deal, and we may have the governments of the world adding it to their balance sheets, which is another big deal. So it's like gold on steroids. So I would argue it's more likely than not when we go up from here, if that makes any sense. And I don't think, and even GBTC, if you look, GBTC traded in the worst of the bear, it was something like a 40% discount. Mara, one of the most hated companies in the space, defends its 1x pretty good. And so I would argue that provides a margin of safety. And I like it a lot. So anyways, let's talk about the two other players. So three. I'm going to talk about three other players. And this is when the maxis exit the video, I guess. Let's talk about DeFi DV. So DeFi DV, as you know, a small position for me. I like it a little bit. I don't like it a lot, like Bitcoin treasury companies, but I like it a little bit because it's true that I don't know who's going to be the Web3 internet computer. I don't know who's going to win that. And if you look at what happened to their MNAV, the market has been absolutely nuts. It is now trading at about 1.1 to 1.2x MNAV, slightly rebounding today at 2%. That's why we're like closer to 1.2. As you can see, there's different ways to calculate it. But the typical way it's calculated is like a 1.14. Look at the sharp decline in MNAV for DeFi DV, right? It went from like a 7x to essentially just above a 1x. It's pretty crazy. These companies, the key I think is like not to buy them on top. We're almost grateful for the despair that we had in August for 3 weeks, because now these companies are not on top. They are trading close to the value of their assets, and I find that very compelling. Let's talk about a company that I've never talked on the channel, Bitmine. And as you know, I historically I've tended to like SBET better, but now that I see that Bitmine has relatively dropped compared to how much Bitcoin, not Bitcoin, but how much ETH they own on the balance sheet. If you look at Bitmine, and they all own a little Bitcoin, but that's just for fun, I think. If you look at them, the Bitmine NAV per share, which is mostly ETH, some cash, but mostly ETH, you're looking at almost $40, and the stock is trading at $44. So that's a 1.1 MNAV on Bitmine. That's a 1.1 MNAV, and that right there is very interesting. And I want to point out that because DFDV and because BMNR, so Ethereum, Solana, because these two have native yield, they will have an ability to defend the MNAV that is going to be very interesting. If you have a yield and your stock price is trading above MNAV, then you just want to buy the asset, right? You want to buy Solana, you want to buy ETH. But if you have a yield and your stock price, say, is trading it in a despair ratio, like a 0.8, then it makes sense for you to sell the Solana or the Ethereum to go ahead and buy back your stock. So that's also another aspect that's going to be very interesting. Now, be very careful. I don't think it makes any sense to ever do that on strategy. It's entirely different because there's no native yield on Bitcoin. But these assets like DFDV, like BMNR, have native yield. And so you have that extra aspect to take into account. And lastly, talking about, the contest, the key is like who's going to win. Like we don't really know who's going to win, and so SUI is going. And again, I want to be cautious about hype, but SUI is another asset, another contender that people think may be the winner of the world's Web3. Granted, SUI is perhaps the one with the least believers that they will win. Although I'm not too sure. What I know is I don't know. For Bitcoin, I know who's going to win the context. Well, of course, I don't even know that, but I'm very confident, given the size of my bet on MSTR, I am very confident that the contest for the hardest asset, the hardest money, the thing that billionaires will want to hold, is going to be Bitcoin. The thing that nation states and top companies will want to hold is going to be Bitcoin. That is my bet. That is my conviction. Of course, you do you, no financial advice. But to me, the hardest asset contest has been won. But what about the world's Web3 computer? Right? And to me, the jury is still out on that one. We still don't know who's going to be the leading Web3 computer. Although, the winner-take-most nature of these markets, kind of like tells you that you kind of want to own the winner. And so if you don't own the winner, this is almost like an ETF type approach where you kind of scatter the money, because Sol is looking really good, but some people believe, especially in TradFi, that it's going to be ETH, and then you have people who are more at the edge who are all about SUI, and so maybe making an equal bet in all of this is the way to go. I don't really know. My bigger bet is on Sol, if you were to ask me. That would be my bigger bet, but I don't really know. I don't know what the right mix is. I know, though, that these companies are cheap right now, and there is a solution, and there is a solution to SUI. There's a new asset for SUI called SUIG, so SUI Group Holdings, and they're trying, of course, to do the same thing that Defi Dev did for Solana, same thing that Strategy did for Bitcoin. Bitmine, I guess Bitmine is now bigger than SBET, so what Bitmine did for ETH, SUIG is trying to do for SUI. And if you look, and again, I would caution against not seeing history. Like before I get into an asset like that, I would want to see weeks, maybe months of history. But if you look, they seem to have 0.92 SUI per share. So you're looking at an asset that's roughly trading in line with how much they have on the balance sheet. And again, there's a yield, and the yield is about 8%. And so the question is, that 8% is either spent in buying more SUI or buying back the stock, or paying interest on debt that they take on to buy SUI. There's many things that could be done, and this company is the newest kid on the block. Again, be very careful about hype. These things can drop really hard, really fast. Remember, right? So DFDV fell from a 7x to a 1x, so we gotta be careful. But it seems like this one is trading pretty close to net asset value, so that's also very interesting. Anyways, I think I think we are still in the valley of despair for all of these assets. I hope, I expect, I bet that they will rebound and keep rebounding. And in the case of MSTR, again, feel free to look at my screenshot. And yeah, it's like MSTR is barely moving while Bitcoin is way, way down today. So anyways, that's a positive. This was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.